DLocal just reported their latest quarterly figures, a double beat. Stock's reaction is quite positive, not just because of a double beat, but because margins will improve and are already improving. And that's exactly what we were looking for. Right now, at the time of making this video, the stock is up around 11-12% or so, taking the stock back over $10. Now, as you can see, year to date, the stock has been quite horrible, right? Because margins kept on going down, 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 while the company was still growing and still profitable, but margins were going down, and so the market was really not that comfortable. It was basically waiting until margins were rebounding. Now, currently it has a market cap of, well, it's going to be closer to $2.73 billion or so, depending on when you're watching this video and depending on how good Thursday is going to be. The forward PE right now sits at 19.3 times, but I mean, this is a company, as you can see here from the analysts' expectations. Top line growth is expected to reaccelerate in fiscal 25 and 2026 by around 27-26% or so year over year. EPS, because of all the investments, is getting hit in fiscal year 2024. It's expected to be down 24% year over year, but then solid reacceleration in the next 2 fiscal years by close to 40% each year. So that's great. From an EV to sales standpoint, 2.4 times in the next 12 months. EV to EBITDA 9.1 times, really not that expensive. And just by the way, short interest is at 5.2%, not that high, but it has increased, right? It has increased since March. In March, they were at 1.91%. Now it has 5.2%. So quite an increase, all things considered. Maybe that's one of the reasons why the stock has not moved much, and maybe now that it's turning green, that could help the stock go up even faster. Currently, the average analyst price target sits 19-18% higher than the price we're at today. There are 11 analysts covering this company, 7 with a hold rating, 2 with a buy, 2 with a strong buy, and 0 sell and strong sell. So what exactly has happened this quarter? We're going to cover all of that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if not. Would really appreciate that. I appreciate all the support I've been getting in the last couple of weeks throughout this earnings season. So thank you very much. We're well on our way to reach 60,000 subscribers by the end of the year. So if you're new here, hit that subscribe button. I don't think you're going to regret it because first of all, it's free. Second of all, I think I do a good job. So yeah, hit that subscribe button. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I'll start by showing you the issues here. The issue was not growth in TPV or growth in revenue, because that has been quite good. The issues were margins. As you can see here, operating margins since Q4 2023 went down from 27.9% to 21.4% last quarter. So not great. Same for gross profit margin, from 42.6% to 39.2%. And of course, previously we were much higher. So the market was really waiting until that investment period was over. And well, according to the comments here, you can see that it's behind us and the company is now well on track to reaccelerate on all fronts. So they said here, we are encouraged by how we see the business evolving. After a soft first quarter, we see ourselves consistently gaining momentum. Despite a tough 2023 comparison, we have once again returned to delivering a quarter of record results in TPV and gross profit. Our margins, cash position, and cash conversion have all improved quarter after quarter throughout 2024. A year that started off admittedly weak has gained positive momentum. We continue to deliver significant growth with TPV reaccelerating to over 40% year over year, driven by our continued ability to expand our share of wallet of existing global merchant base and onboard new merchants. Our performance this quarter was strong across diverse verticals, countries, and products. Notably, 1. We ramped up operations in more countries, offered more payment methods, and gained share of wallet across important logos in financial services, SaaS, on-demand delivery, advertising, ride-hailing, and commerce verticals. 2. We increased payments volumes in Argentina, Mexico, Egypt, and other Latin America, mainly in Colombia and Peru. as well as other Africa and Asia with strong performance in South Africa. And the last one here, we reported record volume in our higher take rate cross-border business, surpassing the $3 billion quarterly mark in flows for the first time. And so, this is the major overview here. TPV is up 41% year over year and 8% quarter over quarter. Revenue is up 13% year over year and 8% quarter over quarter. Gross profit up 5% year over year. And finally, quarter over quarter, we're up big here, 12% increase. Adjusted EBITDA, this is of course normal to see year over year decrease because of, well, the tough comparisons plus all the investments that they've been making, but it's up 23% quarter over quarter. And so overall, if you look at the revenue breakdown, they show you by geography. So Brazil is down quarter over quarter and year over year. Argentina up on both. Mexico up on both. Chile up on both as well. So Latin America as a whole continues to grow. Now with Argentina as a country becoming, well, better and better, less inflation, GDP-wise, will be starting to grow. I mean, this is a tremendous opportunity for them. As for Africa and Asia, we can see that Nigeria basically close to doubled quarter over quarter, but a huge decrease from a year ago. I mean, when you are in those types of regions, we've seen that with Argentina as well, right? Devaluation of the currency, you can see these fluctuations happen. Same with Egypt. Egypt has been quite a roller coaster of a ride. Overall, Africa and Asia is up quarter over quarter and year over year. As for the growth in TPV across the verticals, as always, they show us here the verticals that they're growing quite quickly in. So one of the big ones here is remittances. SaaS is another big one, financial services, on-demand delivery, and ride-hailing all up quite a lot, with e-commerce also growing here 38%. Looking at gross profit, they said the following, and here again you can see across all geographies. So consistently increasing diversification and delivering improved resilience, record gross profit despite quarterly volatility in some markets. So we've got a decrease by 20% in Brazil, loss in share of wallet in credit cards with a top commerce merchant. So that's something to keep an eye on future quarters because Brazil is quite important for them. Mexico is up 45%, positive across the board, highlighted by commerce and financial services verticals. Chile is down just 1%, Argentina down 12%. So here they say positive in multiple verticals. TPV is up 30%, over 30% quarter over quarter, offset by one-off expatriation cost in July. Egypt is up 26%, gross profit driven by strong TPV growth, mainly in advertising, streaming, and financial services. Nigeria is down 11%, so TPV up only single digits quarter over quarter, and Q2 positively affected by temporary gains as explained in Q2 2024. As for other LATAM, that's up 31% year over year. Very positive performance in Colombia and Peru, as they mentioned before. Strength in cross-border and remaining markets with higher take rates. And as for other Asia and Africa, that's up 87%. Solid TPV ramp up of their commerce vertical in South Africa. And here you can basically see it quarter after quarter. If you want to dig deeper, pause the video. As for the investments that they've been making, so they added 157 FTEs or basically an 18% employee growth year over year. By function, it's 41% to technology and product, 18% to corporate central functions, 17% to sales and marketing, and 24% for operations. They said they're going to do this. They said it's for, well, the long term, so expect a short-term hit in profitability and margins. That's what we've seen, but hopefully they did not overhire. We've seen that with plenty of other companies. So yeah, let's see what happens. But yeah, you can see here a lot of them for Africa and Asia, and then the rest here, 16% increase year over year in Americas. And so from a gross profit standpoint, to me, it's quite clear we are on our way back up and to the right? Since Q1, we are going up and up and up. And of course, you have to note that in Q4, we can expect a strong quarter because, well, holiday season, all of that. Plus last year, Q4 was already quite weak. And then Q1 is going to be a very, very easy comparison. So when we're going to look at Q1, which is going to happen in 6 months from now, we should not be surprised to see year-over-year comparisons that look amazing. Just have to remind ourselves that Q1 2024 was very, very weak. And so with regards to gross profit margin, quarter over quarter bridge, and gross profit over TPV quarter over quarter bridge, they say the following. second quarter of sequential improvement in gross profit margin and flat net take rate driven by differentiated value proposition, continuous pursuit of cost efficiencies, and a real value in solving complexities across EM. As for adjusted EBITDA, the evolution there, yes, year over year we're still down, was quite difficult there. Quarter over quarter, we can see solid increase, and again Q1 was the bottom it seems, and now we're making our way back up. Same for operating profit evolution, down 20% year over year, but up 36% quarter over quarter. Overall, what we got here is a 13.7% increase in revenue. Cost of services did increase faster than that, so that's up 20% year over year, and gross profit just increased 4.9%. Now, as I said, this is a company that is increasing their expenses, that is investing quite a lot, and so we're still seeing it right here. Technology and development expenses up 87.5% year over year, sales and marketing up 55%, G&A up 30%, and so operating profit, as you can clearly see, down 20%, and profit for the period down 33% year over year. Now, one last thing here, and that's the NRR. This was basically for Q1, which was 129%. Then we dropped to 100%, and now we're back up to 110%. So that's great to see that rebound quarter over quarter. And so looking at the chart right now, since the bottom here at the start of August, the stock did have some solid momentum. You can see RSI continues to go up quite nicely, the stock as well. And now before earnings, we were above, on the weekly, we're above the 20 and the 50-day moving average. After hours, we're now above $10. Remains to be seen what gets mentioned during the earnings call. It's still not on at the time of making this video. It's quite late. So if there's something crazy mentioned in that call, I'll make sure it's in the pinned comment. Let's see if we can try and go above that 200-day moving average this week. That would be something. So overall, after a long period of time of underperforming with DLocal, finally a good quarter. I mean, the company was always growing quite quickly. It's just that gross profit and, well, margins were coming down because of their investments. And it was just a waiting game to see when that will stop and when we're going to see really the core business show its strength. And this quarter was that quarter. So I'm quite happy to have bought at $8 and even below. It's a small position, but small market cap of a company as well. So if it is successful and they continue to execute quite well, which I think with the new leadership, I think they'll do quite well, this could be another success story. I know it's not a popular stock to talk about, but I do think there is quite a lot of potential there. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.